Top 20 Finance Manager Interview Questions and Answers. Preparing for a finance manager interview requires a solid understanding of financial planning, analysis, and leadership. Employers expect candidates to demonstrate strong technical knowledge, problem-solving abilities, and effective communication skills. This guide provides the top 20 finance manager interview questions with detailed answers. Each response highlights practical examples, strategies, and approaches that showcase both financial expertise and business acumen. By studying these questions and answers, you will gain the confidence to present yourself as a capable, knowledgeable, and results-driven finance professional ready to contribute to any organization's success. 1. What experience do you have in financial planning and analysis? I have several years of experience in financial planning and analysis, where I developed financial models, conducted variance analysis, and provided strategic recommendations to senior management. My role included preparing budgets, forecasting revenues and expenses, and analyzing key performance indicators to support decision-making. I also partnered with cross-functional teams to align financial goals with business objectives. Through this, I gained expertise in identifying cost-saving opportunities, improving profitability, and supporting long-term growth strategies. My experience also extends to presenting insights in a clear, actionable manner to non-financial leaders, ensuring informed business decisions that strengthen overall financial performance. 2. How do you manage budgeting and forecasting process? I manage the budgeting and forecasting process by following a structured and collaborative approach. First, I gather input from department heads to align assumptions with business goals. I then use historical data, market trends, and economic indicators to build realistic financial projections. Regular monitoring and variance analysis allow me to adjust forecasts as new information emerges. I also employ rolling forecasts to maintain flexibility and accuracy. Technology and financial software streamline data collection, ensuring consistency and efficiency. Communication with stakeholders is key, as it ensures transparency and accountability. This disciplined approach results in accurate, actionable budgets and forecasts. 3. What financial software are you proficient in? I am proficient in a wide range of financial software, including Advanced Excel for modeling, SAP, Oracle, QuickBooks, and Hyperion for enterprise resource planning and reporting. Additionally, I have experience with Power BI and Tableau for financial visualization and dashboard creation. These tools allow me to streamline processes, improve reporting accuracy, and enhance data-driven decision-making. My ability to integrate financial systems with operational data ensures real-time analysis and better forecasting. I continually update my technical skills to stay aligned with evolving financial technology. Proficiency in these tools has enabled me to increase efficiency, improve accuracy, and support business growth. 4. How do you ensure accuracy in financial reporting? I ensure accuracy in financial reporting by implementing strict internal controls, standardizing reporting processes, and conducting thorough reconciliations. I cross-verify data with supporting documents and maintain a robust review process that includes multiple checkpoints. Automation tools and accounting software also reduce the risk of manual errors. Additionally, I stay updated on accounting standards and ensure compliance with regulatory requirements. Regular audits, both internal and external, provide further validation. By fostering a culture of accountability and attention to detail within the finance team, I make sure financial reports are reliable, timely, and aligned with both internal and external standards. 5. What strategies do you use for cost reduction? My cost reduction strategies focus on efficiency, waste elimination, and value optimization. I begin with a thorough expense analysis to identify unnecessary or non-value-adding costs. I renegotiate supplier contracts, consolidate vendors, and explore alternative sourcing to achieve savings. Process automation is another key approach, reducing manual tasks and operational costs. Additionally, I emphasize resource optimization by aligning headcount and productivity with business needs. I also evaluate outsourcing opportunities where appropriate. By balancing short-term savings with long-term sustainability, I ensure cost reductions do not compromise quality or growth. The result is a leaner, more financially resilient organization. 6. How do you communicate complex financial data to non-financial team? I simplify complex financial data by translating it into clear, actionable insights tailored to my audience. I use visual tools like dashboards, graphs, and charts to highlight key trends and performance indicators. Storytelling is also effective, framing data within a business context that relates to operational goals. I avoid jargon and instead focus on explaining the implications for day-to-day decisions. By providing concrete examples and actionable recommendations, I make financial information relatable. Regular presentations, workshops, and one-on-one discussions ensure understanding and alignment. This approach builds trust, enhances collaboration, and helps non-financial teams make informed decisions that support business success. 7. Can you describe a time you resolved a financial discrepancy? In one instance, I discovered a revenue recognition discrepancy during the month-end close process. The issue stemmed from misclassified deferred revenue entries, which impacted reported earnings. I quickly investigated by reviewing contracts, cross-checking invoices, and reconciling accounts. I collaborated with the accounting team to correct the entries and updated the reporting template to prevent future errors. I also implemented additional review controls to strengthen accuracy. After presenting the corrected report to management, I provided a summary of the root cause and corrective actions. This resolution not only ensured accurate financial reporting, but also improved the overall control environment. 8. How do you stay updated on financial regulation and trends? I stay updated on financial regulations and industry trends through continuous learning and active engagement. I subscribe to financial publications, attend webinars, and follow updates from regulatory bodies such as IFRS, GAAP, and local tax authorities. I am also a member of professional associations where I network with peers and exchange insights. Participating in workshops and training programs helps me stay current with evolving standards. Additionally, I leverage online platforms and industry forums for real-time discussions. This proactive approach ensures compliance, enhances financial strategy, and keeps me equipped with the latest tools and practices shaping the financial landscape. 9. What is your approach to lead a finance team? My approach to leading a finance team is built on collaboration, transparency, and empowerment. I set clear expectations, align individual goals with business objectives, and encourage open communication. I prioritize professional development by providing training opportunities and mentoring to strengthen skills. Delegating responsibilities effectively allows team members to take ownership while fostering accountability. I also ensure a supportive work environment where achievements are recognized and challenges are addressed constructively. By promoting innovation, efficiency, and a solutions-oriented mindset, I inspire the team to deliver high-quality results while maintaining motivation, trust, and a strong sense of purpose. 10. How do you measure the financial health in company? I measure a company's financial health using key performance indicators such as liquidity ratios, profitability margins, return on investment, debt-to-equity ratios, and cash flow analysis. Regularly monitoring these metrics provides a holistic view of financial stability and growth potential. I also conduct trend analysis to assess performance over time and benchmark results against industry peers. In addition to financial ratios, I consider qualitative factors such as market position and operational efficiency. By combining quantitative and qualitative measures, I provide leadership with a comprehensive understanding of the company's financial condition, enabling informed decisions and sustainable business strategies. 11. How do you handle cash flow management and ensure liquidity for business operations? I manage cash flow by closely monitoring inflows and outflows, ensuring that working capital remains at optimal levels. I prepare detailed cash flow forecasts that account for seasonal trends, payment cycles, and unexpected expenses. To maintain liquidity, I implement strong credit control policies, negotiate favorable terms with suppliers, and optimize inventory management. I also maintain access to credit facilities for contingency needs. Regular reviews help identify potential shortfalls early, allowing proactive adjustments. By balancing short-term liquidity needs with long-term investment goals, I ensure the business operates smoothly without compromising growth or financial stability. 12. Can you explain your experience with financial risk management? My experience in financial risk management involves identifying, assessing, and mitigating risks that impact profitability and stability. I evaluate market, credit, operational, and liquidity risks through scenario analysis and stress testing. To minimize exposure, I implement hedging strategies, diversify investments, and establish strong internal controls. I also ensure compliance with regulatory requirements to avoid legal or reputational risks. Regular monitoring and reporting allow early detection of potential threats, enabling timely interventions. Collaborating with stakeholders, I integrate risk management into strategic planning, ensuring a balance between risk-taking and sustainable growth. This proactive approach strengthens resilience and supports business objectives. 13. How do you evaluate investment opportunities or capital projects? I evaluate investment opportunities and capital projects using financial models such as net present value, NPV, internal rate of return, IRR, and payback period analysis. I also assess risk-adjusted returns and compare them with the company's cost of capital. Beyond financial metrics, I consider strategic alignment, market conditions, and operational feasibility. Sensitivity and scenario analyses help understand potential risks under different assumptions. I collaborate with stakeholders to ensure all qualitative and quantitative factors are considered. This structured evaluation ensures capital is allocated effectively, balancing profitability, risk, and long-term strategic value, leading to informed and sustainable investment decisions. 14. What role does strategic planning play in your financial decision-making? Strategic planning plays a central role in my financial decision-making by aligning financial goals with the company's long-term vision. It ensures that budgeting, forecasting, and investments support overall business growth. Through strategic planning, I identify priority areas for resource allocation, evaluate risks, and create financial roadmaps that adapt to market changes. It also helps balance short-term operational needs with long-term objectives. By integrating financial insights into corporate strategy, I provide leadership with data-driven recommendations that drive sustainable growth. Ultimately, strategic planning ensures financial decisions are proactive, purposeful, and aligned with the organization's competitive positioning. 15. How do you ensure compliance with local tax laws and international accounting standards? I ensure compliance with tax laws and accounting standards by maintaining up-to-date knowledge of regulations such as IFRS, GAAP, and local tax codes. I implement robust internal controls, standardized reporting processes, and regular audits to detect and correct discrepancies. Working closely with tax advisors and auditors helps address complex issues and ensure accuracy. I also provide training to finance staff on compliance requirements. Automated accounting systems further reduce errors and maintain consistency. By integrating compliance checks into financial operations, I minimize regulatory risks, maintain transparency, and ensure the company upholds the highest standards of financial integrity. 16. Describe a situation where you improved financial efficiency through process automation. In my previous role, I identified inefficiencies in the manual expense reporting system, which caused delays and errors. I led the implementation of an automated expense management tool that integrated directly with the ERP system. This reduced processing time, improved accuracy, and provided real-time visibility into expenditures. I also trained staff on the new system and created dashboards for monitoring. The automation not only saved significant labor hours but also enhanced compliance with expense policies. Overall, the initiative streamlined reporting, reduced costs, and allowed the finance team to focus more on strategic analysis rather than administrative tasks. 17. How do you manage relationships with auditors, banks, and external stakeholders? I manage relationships with auditors, banks, and external stakeholders through proactive communication, transparency, and trust building. For auditors, I ensure timely delivery of accurate financial records and full cooperation during audits. With banks, I maintain regular contact, providing updates on financial performance while negotiating favorable credit terms and financial services. For other stakeholders, I share clear, concise financial reports that highlight business health and growth prospects. By addressing concerns promptly and maintaining professionalism, I build strong, long-term relationships. These partnerships are crucial for securing financing, ensuring compliance, and maintaining credibility in the financial community. 18. How do you approach financial restructuring or turnaround strategies for a struggling business? I approach financial restructuring with a comprehensive analysis of the company's financial position, identifying areas of inefficiency and unsustainable costs. The first step is stabilizing cash flow by prioritizing liquidity and renegotiating debt terms. I then evaluate underperforming assets, potential divestitures, and opportunities for cost reduction without harming core operations. In parallel, I explore revenue enhancement strategies, such as market expansion or pricing optimization. Clear communication with stakeholders is critical to maintaining trust during transitions. By implementing disciplined controls and focusing on long-term sustainability, I guide struggling businesses toward recovery, renewed stability, and improved profitability. 19. What KPIs do you track most closely to monitor business performance? I track key performance indicators, KPIs, such as revenue growth, gross profit margin, EBITDA, operating cash flow, and return on equity to monitor business performance. Liquidity ratios like current and quick ratios provide insights into short-term stability, while debt-to-equity ratio measures financial leverage. Additionally, I monitor working capital efficiency, days sales outstanding, DSO, and inventory turnover. Non-financial KPIs, such as customer acquisition cost and employee productivity, are also important. By combining financial and operational KPIs, I obtain a holistic view of performance. Regular tracking ensures timely interventions, supports decision-making, and aligns financial outcomes with strategic goals. 20. How do you balance short-term profitability with long-term financial growth? I balance short-term profitability with long-term growth by aligning operational efficiency with strategic investments. In the short term, I focus on optimizing costs, improving cash flow, and achieving consistent margins. At the same time, I allocate resources to research, innovation, and capital projects that ensure future competitiveness. I use scenario planning to evaluate trade-offs and mitigate risks. Communication with stakeholders is essential to manage expectations and highlight long-term value creation. By maintaining financial discipline while investing in strategic opportunities, I ensure profitability today while positioning the company for sustainable growth in the future. Finance manager interviews test both technical expertise and leadership qualities. By preparing thoughtful answers to these top 20 questions, you can demonstrate your ability to manage financial operations, drive business strategy, and lead teams effectively. Remember, employers are looking for candidates who not only understand numbers, but can also translate financial insights into business success. Approach your interview with confidence, professionalism, and clear communication. Good luck.